Hey everybody, Sean here from Guaranteed Rate. Want to give you a quick market update with what we're seeing in real estate and mortgage with the end of the summer approaching. I know I'm excited for the fall market and the activity that's going to bring hopefully our way. So here's some of the headlines that we're seeing. One is home sales are down 20%. Okay, that's been the big headline. I've gotten asked about it a lot. Why are home sales down 20%? Two factors in my opinion. One is what we're comparing it against. So 2021, historically hottest market maybe we've ever seen, fueled by super low rates, the lowest rates of all time, fueled by massive demand, okay, fueled by stimulus money, and then fueled by everyone kind of recalculating what they want in housing. We saw people upsizing. We saw people moving to the suburbs. We put a huge demand for second homes and investment properties. Okay, we saw stock market last year in 2021 was also fueling all this. Massive wealth was created. Companies were, income was increasing. All these things. So 2021 was fueled by all those things and was massively hot. So now the market is recalculating, recalibrating, okay, normalizing, and so that's why the numbers are down 20% year over year. But number two, most importantly, is we saw a big rate increase in the months of May to June. We saw the biggest rate increase in almost 40 years. Why is that important? How does that impact the numbers in July of 2022? Well, the average cycle for a client to go from approval to closing on a house can be anywhere from 30 to 60 days, right? 30 to 45 days, maybe. I think 45 days is the average closing time, right? So when rates spiked, on top of home price appreciation already happening, on top of the intensity of the market with wave contingencies, cash buyers out there, a lot of buyers just said, this is too much for me. I'm going to take myself out of the market and do nothing. I'm going to re-sign my lease, or I'm going to stay where I'm at. And so those clients took themselves out of the market. They didn't make offers and they didn't close in July 2020 versus last year, everybody was all in. So those are the two reasons why I think home sales are down 20%. I do think the fall market is going to be better than the summer has been. It's definitely gotten a little quiet, more seasonally normal, which we didn't have over the course of the last couple of years. Okay. Mortgage applications also down about 20% year over year, also due to what you're comparing it to, whereas everybody wanted to get into the housing market last year due to their needs, due to borrowing costs, and then some people have taken themselves out of the market this year due to the intensity of the market, maybe kind of getting a little burnt out of even trying to find a house. At the beginning of this year, there was no inventory. People don't apply for mortgages when there's nothing on the market they want to buy. And then on top of that, higher borrowing costs. Every time rates rise, there's some affordability that's lost. On top of that, with home price appreciation happening, you combine those two things and there's some real affordability issues there. So people don't make buying decisions, don't apply for a mortgage. Now, fortunately, a lot of people have remained in the market because we've seen couple things happen. One, income has continued to rise. That's helped people sustain these higher mortgage rates and higher purchasing prices. On top of that, fortunately, stock market had a choppy start to the year, and it's still down year to date. However, the month of July was one of the best months the stock market's ever had. It had a nice little recovery. So that's something to keep an eye on. If the stock market continues to recover, we'll see demand continue to increase into the fall market. So that's one of the big things we're watching. What we did see go up, okay, was mortgage rates. Okay, so mortgage rates are not as high as they were in May and June of 2022 when everybody thought rates were up over 6%, going to 7 or 8. Rates actually dipped down into the fours in a lot of cases, but the month of August was a tough one for mortgage rates. Rates went up about a half point in the month of August so far. I know a month's not over, but that's where we're at. So rates right now, we're hovering in like the low to mid fives in most cases. Jumbo mortgages are still in the high fours. These are on 30-year fixed rate mortgages. Obviously, every scenario is different. Why did rates go up? Two reasons. One, inflation concerns all over the world. Inflation, we've been talking a lot about here in the U.S. We said double-digit inflation fears in many countries, especially in Europe. So inflation, although it's come down a little bit, which was great news in the U.S., other countries had spikes that were reported. Two, the Fed's expected to continue to hike rates in September. We're going to find out a little bit more over the course of the next couple of days as they're meeting in Jackson Hole. But next Fed meetings in September, late September, and they're expected to raise rates anywhere from 50 to 75 basis points again. So they've remained aggressive. I think they are going to raise rates again, mostly due to a couple things. One, we saw a jobs report early this month, which was super strong. Unemployment in our country is still super low, some of the all-time lowest levels. Job growth, income growth, all those things remain pretty strong across the U.S. And then on top of it, like I said, stock market's had a nice little recovery. So we'll see how that factors in. What else is up? Inventory's up. Inventory's up 10% year over year. Okay, when comparing to 2021, and it's up as much as 30 to 40% compared to earlier this year when there was almost no homes on the market. So we're starting to see homes on the market. What else is up is days on market. Okay, the average days on market is increasing. It's the highest it's been all year. So homes aren't selling as fast. Okay, but keep in mind, when I say inventory is increased, it's not like there's this dearth of inventory. Inventory is in fact lower than it was in 2020 and 2019. So there's still not anywhere near enough homes for sale in our country. That's why another thing that's up is home price appreciation. Home price appreciation is up 8.3% year to date so far. It's expected to be another double-digit growth year for home prices, following almost 20% in 2020, almost 20% in 2021. We're expected to be up over 10% when the year is all said and done, because there's a massive shortage of homes. There's only a 3-month supply of homes, right? A 6-month supply is what's considered a balanced market. We're at half of that. Okay. Now it seems like there's a ton of inventory in the market because of what we've been used to over the course of the last couple of years, especially earlier this year. But so inventory is increasing. It's just normalizing. There's not like short sales. There's not foreclosures. There's not an oversupply of homes. In fact, there's way more buyers out there than there is sellers. So it's still definitely a seller's market, in my opinion. Okay. So my observations in the market right now: great time to be a buyer when you compare it to the last couple of years. Okay, still a seller's market, like I said, but there's fewer multiple offer situations. So what I'm observing in the month of May of 2022, the average multiple offers on a home were over 4 per home. Then it went down to just over 3, and then in the month of July, it was just under 3, like 2.8 offers per home. Okay, not as many homes are selling above asking price. In the month of May, it was about 55% of homes were selling over asking price, went down to about 51% in the month of June, and just under 40%, 39% in the month of July. So the intensity of the market is definitely calming down. There's not as much competition out there. Some people have renewed their leases. As we know, September 1 is a big, or the summer in general is a big lease renewal time. Okay, not as many people are out there in the fall seasonally anyways, right? So it's a better time to be a buyer generally in the fall than it is the spring. Okay, contingencies are back. I've never had, I don't want to say never. This year, the earlier part of the year, there was no appraisal contingencies, no mortgage contingencies, no inspection contingencies. We're starting to notice buyers are getting all those things back again. Rates, although not as good as they were the last couple of years, right? Historically speaking, if you look at a rate graph, they're still amazing. When you're borrowing money in the 4s and 5s, you're doing pretty good. And then sellers' expectations are getting normalized again. They were sellers, it was such a seller's market over the course of the last year and a half. Sellers are starting to realize the market has changed. If you're a seller, what can you do, right? Understand this can be a bipolar market. Pricing is more important than ever. Okay, so important to have proper expectations. This isn't the spring of 2022. This isn't 2021 either, right? This is a whole new market. You have to price your house accordingly. If you price your house right, it's going to sell, and likely you'll have multiple offers, and you might even sell it over asking price. If you price it wrong, it's going to sit on the market. The market never lies. Okay, it's still an amazing time to be a seller. Think about the home price appreciation we've had over the course of a couple of years. The price you're going to get for your home is unbelievable. It's not maybe as good as it would have been 3 months ago, but outside of that, it's the highest prices you're ever going to get in terms of putting your house in the market. So, there's been massive home price appreciation. Great time to get that house in the market. Whether you're a buyer or seller, I think it's more important than ever to be working with a professional. Working with some of the best real estate agents in the industry can make a huge difference in terms of you winning your offer if you're a buyer, or getting the max value if you're a seller. So, what we're doing in this market to help right now, 3 big things. One is always, if you're a buyer out there, or if you have a buyer out there that needs a pre-approval, we can always turn around a pre-approval same day, generally sometimes in a couple hours. We can also put them through our power bid pre-commitment process. We're having a ton of success with that. Those clients are winning at a super high level. It appears, it makes them look and feel like cash buyers to sellers. It creates certainty in the seller's eyes and the seller's agent's eyes. It allows us to close super fast. We're doing 10-day closings. We've never done so many closings in a week or two. So ask us about all those things. If you need a pre-approval quickly, we'll do it. nights, weekends. We're available 24/7. If you want to close a loan super fast to have your offer stand out amongst all the other offers out there, or have your buyer stand out. And if you need a pre-commitment letter, our power bid process, we're happy to do all those things. So, and lastly, we're going to do a really detailed market update in mid-September. So definitely feel free to sign up for that. But that's what I got. I tried to keep it quick. I always struggle with that. Hope you have an awesome weekend, everybody. Have a great week.